What if I told you that becoming profitable in crypto trading isn't about finding the next 100x coin? It's not about staring at charts for 12 hours a day. And it definitely isn't about using 50x leverage and hoping Bitcoin goes in your direction. The real secret is much less exciting: risk management, a repeatable strategy, and discipline. Crypto is extremely volatile, and regulators warn that you can lose a substantial amount, or even all, of the money you put at risk. So in this video, I'll show you a simple framework for approaching crypto trading like a business instead of a casino. The first mindset shift is simple. Your goal is not to make money on every trade. Your goal is to build a system that makes money over a large number of trades. You are going to lose trades. Even excellent traders lose. The difference is that profitable traders control how much they lose when they're wrong, while trying to maximize their gains when they're right. Think about it this way. If you lose $10 on a losing trade, but make $20 on a winning trade, you don't need to be right every time. You just need a strategy where your winners can outweigh your losers. And that leads to the most important part of crypto trading: risk management. Here's a simple rule you can use. Never risk money on a trade that you can't afford to lose. For example, imagine you have a $1,000 trading account. Instead of putting the entire $1,000 into one trade, you might decide that your maximum acceptable loss on a single trade is $10 to $20. That means if your setup fails, you take the loss and move on. This is called position sizing. Your position size should be determined by how much you're willing to lose, not by how much money you want to make. And remember, crypto markets can move extremely quickly. Leverage can magnify both profits and losses, and leveraged positions can be liquidated quickly. So if you're a beginner, don't make leverage the center of your strategy. Surviving long enough to learn is more important than making a huge profit on one trade. The next mistake beginners make is trying to trade everything: Bitcoin, Ethereum, meme coins, altcoins, Forex, stocks, NFTs. And suddenly they're following 30 different indicators. Don't do this. Pick one market and one trading setup and learn it deeply. For example, you might create a simple trend following strategy. You could look for a clear market trend, a pullback toward an important support area, confirmation that buyers are returning. Then you define your entry, your stop loss, and your target before entering the trade. The exact indicators matter less than having clear rules that you can test. Because if you change your strategy every time you lose, you'll never know whether the strategy works. Here's something that can dramatically improve your trading. Keep a trading journal. After every trade, record: why did I enter? Where was my stop? Risk. What happened? And most importantly, did I follow my rules? Because sometimes a losing trade is actually a good trade. You can follow your strategy perfectly and still lose. And sometimes a winning trade can be a terrible trade if you broke all your rules and simply got lucky. Your job isn't to judge yourself based on one trade. Your job is to look at your results over dozens or hundreds of trades and find patterns. That's how you turn trading from emotional guessing into a process. Now let's talk about the biggest enemy of most traders: emotion. You lose a trade. You get angry. You immediately enter another trade to make the money back. You lose again. Now you're trading twice as aggressively. This is called revenge trading, and it can destroy an account incredibly quickly. The solution? Create rules for when you don't trade. For example, if I hit my daily loss limit, I'm done. If I feel emotional, I'm done. If there is no valid setup, I don't trade. Remember, you don't get paid for being in the market. You get paid for taking good opportunities. Sometimes the best trade is no trade at all. So, if you want to become consistently profitable at crypto trading, remember these 5 principles. Number 1, don't treat trading like gambling. Number 2, risk only an amount you can genuinely afford to lose. Number 3, focus on one repeatable strategy instead of chasing every coin. Number 4, journal your trades and review your performance. And number 5, control your emotions and protect your capital. There is no strategy that guarantees profits in crypto. Be especially skeptical of anyone promising guaranteed or risk-free returns. Regulators specifically warn that those claims are major fraud red flags. The traders who last aren't necessarily the ones who make the biggest trade. They are the ones who manage risk, stay disciplined, and keep learning. If you found this useful, subscribe for more practical crypto trading and investing content. And remember, protect your capital first. Profits come second.